Well, gold is up fractionally today, but it's been under pressure recently after a brief stint above $2,000 an ounce. Central banks have been some of the largest buyers of gold bullion, which is up 14% year to date, according to Bloomberg Intelligence. And for the average investor, Morgan Stanley is saying it's a good time to buy gold stocks. Yahoo Finance's Jared Blickery, he's got all the details here for us. Hey, Jared.
Hey, Brad, let's go to the Wi-Fi Interactive, where I am looking at gold futures right now. As you said, up fractionally today, but under a little bit of pressure over the last few sessions. Now, this is a 2-month chart, and beginning with the Israeli-Hamas incursion war, that fueled a rise to about $2,000 per ounce, and this has been a ceiling historically. I'm going to show you a 5-year chart now, and you can see how gold has bumped up against this. This was the first record high, and then we got another attempt here and a third one where we exceeded it by just a tiny little bit, and now we are still in the upper end of that range. However, when we're in a trading range, we have to be careful because it's quite easy to return to the bottom. And I would also note that there was a really nice fake out here in 2022 for gold bears that did not work out for them. Now, I also want to show you some of the largest marginal buyers of gold, not people, but central banks. This goes back to 2010 and shows you how many tons central banks are buying here. And you can see 2022, last year, was a record year. We have China buying gold, we have Russia de-dollarizing, which is about a 10-year-old trend. And I should add that this candle right here, or this bar right here, is only through Q3. So we could easily see this exceed last year's high. And if that happens, it might be concomitant with a price rise to $3,000 an ounce. And that's something that people have really been looking out for. One hiccup, this is a major divergence. This is a 20-year chart of gold, which is cyan, and you can see that it's right up there by about $1,900, $2,000 an ounce. And then an inverse chart of the US 10-year TIPS yield. So without getting into all the wonky bond stuff, all I want people to realize is that there is a huge gap here. And since this is the inverse, we could see interest rates fall or gold fall to meet each other in the middle. We'll have to see how that resolves. But as I said, or as you said in the beginning, Morgan Stanley recommending gold stocks. I was checking with Bloomberg Intelligence. They believe that there's a $150 premium on gold because of the Hamas-Israeli incursion. That could disappear if things go away. It could increase if things get better. But nevertheless, that's where the numbers stand. So here we are. I was interviewing Mish Schneider a couple of weeks ago, and she said if gold finally punches through 2050, easily heads to $3,000. So on that note, I'll close the book here on the other Bitcoin, gold.
All right, thanks
Don't
so
write
much,
letters.
Jared. Yeah, exactly. Appreciate it, Jared. Thanks so much. We've got more from the New York Stock Exchange coming up in the next hour.